So, hello, and a massive hello to everybody. Hope we're all having a great day. It's 50 pips, rocking and rolling, 5th of September 2019. No trade calls, no recommendations, or response to our own stuff. We're here for educational purpose only. So, what's going on? A little quick update. I mean, let's heads up today. We got ADP, ISM, crude inventories coming out. A lot of, the circus in the UK keeps on going on. And, we'll have to see what we get again from China US trade deals. But I mean, for now, it looks like the can has been kicked down the road with that meeting in October, announced in overnight trading. So of course, within liquidity, we get that little ramp, and the pain trade is clearly higher. I think here the focus is, again, keep an eye on DXY as we discussed, right? As you saw those reversals that were put in, we talked about Aussie higher, Kiwi higher, Euro higher, cable higher, et cetera, et cetera. Here, if you look at the DXY, essentially we've had this attempted break outside of the 98 mark, right? And the big question is, can it hold, right? Especially, can it hold in an aggressive fashion, or is this just going to keep on respecting this channel and we'll see much of the same, and we'll slowly see it drift back down into the 97 and then, back towards the 98, and we have to wait until we get something substantial out of the central bank. So I think here probably we might just be, sidelines are still stuck in this channel at the very least until the 18th, where we get that Fed, and we'll have to see if indeed they cut, they don't cut, they're aggressive with the cuts or not. But right now, the moves we were discussing are playing out quite nicely, and we would expect this to come back down to the 98 mark, and that's in line with all those trades we've been talking about on the currency side. Another interesting thing is the action on crude yesterday. The move yesterday was pretty, I'm not going to say silly, but a big move, right? Usually, I think it was up like 4.8%, something like that. That kind of move to the upside, if memory serves, don't quote me, happens like around 2% of the time. So clearly, to me, especially when you see it's coming into this confluence of upside here, it's very fadeable, right? See you've got the 50, the 200 DMA coming in here at a key level on no big news here, right? Just the usual lift. And so that was particularly fadeable to me. So we'll have to see how this trades today, but I'm looking for this to come back into what I would consider a more neutral kind of level short term, and that would be the 55 mark. But globally, similar to equities, we're still stuck. We're not really going anywhere. We still think unless something substantial happens, we'll be stuck in this 60-50 range. But again, here I think it's just about tactical trades right here. Now we're positioned short for a move back at least into 55. Let's see what we get. I mean, in terms of equities, going back to equities here, remember we discussed it's about this range, and is it going to manage to break out? Now, you have to be suspicious about what happens in overnight trading, but here you see we've broken above the 50 DMA to the upside, and we talked about the 50 and the 200. So clearly today, if we can close above the 50, the pain trade is for this to rip up back into those highs, possibly higher. And again, if we ever get a daily close below the 200, then that would be very, very bearish. So for now, the assumption is if we can close above, then we would expect the squeeze to continue, possibly the squeeze to continue all the way into the 12th, and we would be looking to play longs for this move back to those highs. But today we're watching very closely the action on, if we trade like this, the cash markets are going to open with a gap to the upside. We're looking at the action here because if we can't hold the overnight low liquidity squeeze, right, then maybe we could see a very quick move back down to fill downside gaps. And as we said on the SPX, there's plenty of room to the downside, whether you're looking at SPX or NDX. But again, very, very choppy. And remember, unless we really get a close outside of this ranges, essentially it's really much to do about nothing. Now, what's interesting, yesterday we saw in the little bit of a panic, we talked about gold and how we thought that essentially those highs were going to hold. And you see what happened yesterday. We got that ramp, little panic ramp, and we just clipped those highs, and we couldn't get any traction. So this is a particularly interesting chart to keep an eye out for, because if gold holds above, then we would clearly not be looking to fade it to the upside. However, let's see if it can put in some kind of a top here. But again, it's tricky because especially with this dollar weakening, right? And again, as we said, don't make it harder than it should be, really, right? You could just keep an eye on what's going on USD CNH, right? And you can see, we've talked about this a lot over the past year or so, right? Whether you want to look at this in relation to what's happening with gold, whether you want to look at this with the general risk off, risk on theme, but right here, this is signaling really all okay, no worries, right? Now we've gone back into this range. We'll have to see how we trade today, but has anything fundamental changed? Not really. They just managed to kick the can down the road a little bit longer, but we suspect that a lot more important is going to be what happens from the central banks, right? So indeed, are we going to end up, especially with the FOMC, with the Fed, are we going to go and really see them press for this 50 cut? Or is it just going to be another 25? It's going to be interesting with the way the data is shaping up now, and keep an eye to all these FOMC speakers on deck, because we'll see how they're trying to steer us. Keep an eye on those probabilities with the CME watch tool. But, now it's a lot of chop. Nothing huge is happening. The patterns are quite classic. The reversals on Forex are quite classic, very technical. And, in terms of equities, we're getting the usual news bomb in the overnight session, and then a little bit problem to follow through, which is no surprise because nothing substantial changed. So, you just have to be nimble. And again, keep in mind that we're towards this back end of the month or middle of the month, the 12th to the 20th. That's really when you have to have your helmets on. That's really when you have to look for real opportunity. Right now, it could just be a lot of chop, okay? Wishing everybody an awesome day ahead. Take care. Bye-bye.